Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world, one corporate filing at a time. Today, we're diving into a report that sounds like it involves a SPAC merging with a concrete company. Grab your hard hats because we're about to break down what Haymaker Acquisition Corp. 4 is up to. If you are new here or you appreciate getting straight insights from corporate documents without the jargon, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these findings further. So what exactly is this document we have here? It is a Form 8K, which is basically a report on very important things that happen outside of their regular reporting schedule. Think of it as a company yelling, "Hey, something important just happened," and this is their official way of doing it. This filing isn't about their normal quarter-to-quarter performance, but something more event-driven. Haymaker Acquisition Corp 4, or Hayek as we'll call them, is a special purpose acquisition company, or SPAC. In plain English, that means they are a company created just to raise money by going public and then use that money to buy another, usually private, company. So they are the vehicle to take another business public. The big news here is that Haymaker has completed a business combination, which is a fancy term for their acquisition. They've merged with Suncrete Incorporated. That's the real business here, the concrete one. And what did Suncrete do? Well, according to this, Suncrete completed its acquisition of SRM Incorporated, which does business as Schwartz Ready Mix. So Hayek has merged with Suncrete, and Suncrete itself just bought another company, Schwartz. It sounds like a company buying a company, which then bought another company. This is all about consolidating the ready-mix concrete business in Oklahoma City. Now, since this is an 8K filing, we are not going to see the deep dive financial tables that you might find in their regular reports. Those are usually in the 10Q or 10K filings. This report primarily focuses on the announcement of the acquisition's completion and the regulatory disclosures that come with it. They are telling everyone that the deal is done. What they do tell us is that they will be filing a registration statement on Form S-4. This document is essentially where they will lay out all the details about the business combination for investors to review, including a proxy statement for shareholders to vote on the deal, and a prospectus detailing shares of the new combined entity. They explicitly state that this information is just an announcement and not a solicitation for proxies, votes, or an offer to sell or buy securities. It is a disclosure, not a sales pitch. They are clarifying their position to avoid any misinterpretations. This means for the detailed financials and future outlook of the newly combined entity, we will likely need to wait for future filings once everything is officially merged and accounted for. Think of this as the "we got married" announcement, not the honeymoon report. Like almost all corporate filings dealing with the future, there is a big section on forward-looking statements. This is where they talk about what they hope to achieve, but they also are legally required to warn you about all the things that could go wrong. They are saying, "We think this will happen, but don't hold us to it because the world is complicated." They mention that these statements involve risks and uncertainties, and actual results could be very different. This is super important to remember whenever you read about future plans from any company. Specifically, they worry about Suncrete's ability to successfully integrate the Schwartz businesses. They are concerned about management time being taken away from ongoing operations, substantial transaction costs, and the risk of losing customers or key personnel. They also worry about business disruptions and whether they can achieve the expected synergies, meaning cost savings or revenue enhancements, and if it will take longer than anticipated. This candidly shows the challenges of any merger or acquisition. It is not always smooth sailing, and they are upfront about the potential choppy waters ahead. This section is usually where you'd find the actual financial statements, but in this 8K, it mainly points to Exhibit 99.1, which is the press release announcing the acquisition. They've also included Exhibit 104, which is the cover page interactive data file, basically an electronic tag system to help computers sort and understand the filing. It does not contain new financial performance data for Hayek itself in this context. Rather, it is about the event of the combination. So, what does this all mean for investors? Hayek was essentially a shell company waiting to find a target. They found Suncrete, and now that the combination is complete, Suncrete, along with its new acquisition Schwartz, becomes the operating business. The success of this venture will now depend on Suncrete's ability to run and grow its concrete business and integrate Schwartz effectively. The forward-looking statement section, while full of standard legal disclaimers, does highlight the real challenges of merging two businesses. Investors will be looking for future filings that contain the combined financial performance of Pubco, the entity that will emerge from this combination. Now, looking at this filing more broadly, it is clear that large SPACs like Hayek are primarily facilitators. The real value and risk lie with the underlying business they merge with. In this case, it is a ready-mix concrete operation. The success here hinges on operational efficiency, market demand for concrete, and skillful integration of acquired assets. The potential for significant volatility is often higher with SPACs because you are betting on the management's ability to pick a good company and the company's ability to execute its plan post-merger, which this filing clearly acknowledges are not guaranteed. The risks related to integration are very real, and the market sentiment towards these types of deals can shift rapidly. Alright, that is our breakdown of Haymaker Acquisition Corp. 4's latest filing, what is your take on these numbers and what they signal for the company's future? Do you think merging with Suncrete and acquiring Schwartz was a smart move? Drop your thoughts in the comments below. If this analysis was valuable to you, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord in the description where we continue these discussions and share insights. Thanks for watching, and we'll see you next time on Corporate Decoder.